Hello, welcome to the European Open Briefing for Friday, June the 12th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So it is a rather quieter end to the week after a fairly eventful week. We had central bank meetings and quite a bit of data. The main event this morning has been the Bank of Japan policy meeting, where, as expected, they kept monetary policy unchanged. The yen is weaker against other currencies following some rather dovish comments by the Bank of Japan Governor Haruhiko Kuroda. The dollar is firmer though. We did have some better US data yesterday, which was more in line with the Fed's more positive outlook for the US economy. The pound is a bit steadier, but below yesterday's highs when we had that Bank of Japan, the Bank of England monetary policy meeting, where we saw a shock split in the vote. And commodity currencies are a little bit firmer this morning after yesterday's declines. But let's start with the dollar-yen pair. We can see that after Wednesday's big drop following the retail sales and inflation disappointment, we saw a brief recovery after the Fed's meeting, but the main gains came yesterday. We had the weekly jobless claims fell more than expected. Last week we had business surveys, the New York Empire State Manufacturing Index and the Philadelphia Fed Manufacturing Index, both of which came in above expectations. So that helped the dollar climb back above the 111 level against the Japanese yen. And also that data did kind of reassure markets that perhaps the Fed's outlook wasn't over optimistic, although there are still some doubts about how strong the US economy is. I mean, we did of course have those disappointing retail sales inflation numbers, and even yesterday we had import prices which fell by more than expected, and of course we've got other factors as well to consider, such as the investigation into Donald Trump's possible obstruction of justice, as well as the possible Russian collusion with the Trump election campaign. And of course, also weighing on the dollar is we had the resumption of the tech sell-off yesterday, where major tech companies such as Apple and Facebook fell sharply once again. But for now, the dollar is managing to end the week on a higher note. Moving on to the Japanese yen, we can see the yen is also down against other major currencies such as the euro and the pound. We had a policy meeting where there was little change, but the Bank of Japan was a bit more confident about private consumption ticking upwards. They said in the statement, private consumption has shown increased resilience, and they were also more optimistic both about the Japanese economy, about moderate expansion becoming more sustainable, and also about the global economic outlook as well. But the reason why the yen fell is because the governor Haruhiko Kuroda, he talked down the talk of exiting from the asset purchase program. There's been speculation that the Bank of Japan could soon start to cut back on its stimulus program, but Kuroda he pretty much reiterated that given the fact that inflation is still too far off from the 2% target, it's too early to discuss normalization. And he also said that inflation expectations haven't yet started to go up, although there are some signs that they will start to rise soon. But despite that language, in fact, the Bank of Japan has already started to purchase less Japanese government bonds because now that they're targeting the yield curve, they want to maintain 10-year yields at 0%. It looks like the Bank of Japan is purchasing closer to 60 trillion yen annually rather than the 80 trillion yen, which is their set target. Well, that's actually a loose target at the moment, but still, the indications are that they're already buying slightly less than previously. Moving on to the pound now, because the pound has had a bit of a rough ride this week, because on top of the political uncertainty at the moment in the UK, where the Conservatives are still trying to reach a deal with the UP party for their backing, given that now they have a minority government in the UK. We also had quite a bit of data. On Tuesday we had inflation numbers. We saw inflation rising to 4-year high of 2.9%, and that has put the pressure on the Bank of England. We saw that yesterday, where MPC members voted 5-3 to hold rates. 3 members voted to increase rates, and that was a bit of a surprise to the markets, because up until now all indications were that there was just one dissent within the Monetary Policy Committee. Although despite that, most analysts still expect the Bank of England to not raise rates until 2019, but we did see that reaction in the markets yesterday. The pound shot up around 100 pips to close to the 1.28 level. But it did soon fall back, because we also had retail sales which were disappointing. Retail sales actually fell 1.2% in May over the month and was just up 0.9% over the year. That's the slowest in 4 years. So we are seeing concerns about the slowing consumer spending in the UK, and that's mainly because of the higher inflation isn't being matched by higher wage growth, so consumers have less real incomes to spend. But for now, the pound is being supported by the more hawkish Bank of England. Is currently trading at around 1.2780. Quick look at commodity currencies. The Aussie is firmer this morning. It did come off its highs yesterday. It's currently trading around 0.7595. Of course, it was boosted yesterday by strong employment data out of Australia. The New Zealand dollar, though, we were expecting positive GDP numbers, but they came in below expectations, so that had quite a big impact on the Kiwi, which had actually risen significantly in the weeks prior to